So, hi students, welcome back. We will discuss the part 2 of this first chapter, Partnership Fundamentals for 12th Standard. As I told you already, my dears, these videos are as useful to CBSE and ICSE, means useful to CBSE and ISC students, both students of that is CBSE and ISC students can benefit from these videos. So you can circulate amongst your friends these videos. Now, in part 1, we have discussed the basics or concepts of profit and loss appropriation account, capital accounts. See, you can see as it is there on the screen. We have discussed already about profit and loss appropriation account, capital accounts, interest on loan concept I have explained, interest on capitals, interest on drawings. Now, all theoretical aspects I have explained. In fact, we had a detailed explanation of these topics. As I told you, remaining two topics which are very important, prominent topics of this chapter, that is past adjustments and guarantee of profits. These are the two topics which are pending. As I told you, we'll have another video. So this is part 2 video. Now, I even promised that we will have few numerical sums which we will do. Okay. So what I will do, I will take up one or two sums of profit and loss appropriation account. Okay. Then one or two sums on interest on drawings. Then past adjustments, merely theoretical explanation will not help. So one or two sums we will take past. Through some I will explain the concept, even guarantee of profits also. As I told you, my dears, this entire chapter keeps revolving around preparing profit and loss appropriation account only. Round, it will keep on it will keep on getting linked to that only, profit and loss appropriation account. So let's get into solving the sums, not of past adjustments, profit and loss appropriation account and capital accounts. Then we will go to past adjustments. Okay. Now, if you see this one, yeah, so as you can see on the screen, we will take up one sum which is from T.S. Grewal only. Question number one comprehensive sum we will take. Question number 52. Question number 52. That one, you see, if you look at there, the last line, if you see, after considering the above facts, you are required to prepare profit and loss appropriation account and partners capital accounts. So these are the two things I told you. This chapter, okay, basically has got these two main concepts. So we will do this. A and B are partners in the, this is the question I'm reading. A and B are partners sharing profits and losses in the ratio of 3:1. On 1st April, their capitals were 5 lakhs, 3 lakhs. During the year, the firm earned net profit 5 lakhs rupees. The terms of the partnership are interest on capital 6%. A will get a commission of 2% on net sales. B will get 5,000 per month salary. B will get commission of 5% on profit after deduction of all expenses, including such commission. Partners' drawings were A 80,000, B 60,000. Net sales for the year is 30 lakhs. After considering the above facts, you are required to prepare profit and loss appropriation account and partners' capital accounts. Definitely we will do, my dears. Now all of you can take up your notebook and start working out the sum along with me. Question number 52 of your textbook. This is last year book. So profit and loss appropriation account, I have written in shortcut P&L appropriation, APPN appropriation account. It's a ledger account. I told you, no, this is prepared after preparing the profit and loss account in the final accounts of a partnership firm. Just as profit and loss account is prepared after preparing the trading account. Now profit and loss appropriation account is prepared after preparing the profit and loss account. Particulars rupees, particulars rupees, debit, credit. Now credit side, by profit and loss account, by profit and loss account, net profit. How much net profit he has given? He has given net profit amount is net sales for the year 30 lakhs. After considering the firm earned a net profit of rupees 5 lakhs. Okay, so write down outer column 5 lakhs. Now I told you already, one more item come in the appropriation account credit side, that is interest on drawings. But in this particular sum not given. If it is given, you have to write down here by interest on drawings, the two partners interest on drawings. Now if 3 partners are there, 3. Now here 2 partners, so 2 partners in drawings amount is there, partners drawings is there. Interest on drawings not mentioned in the question, that's why we cannot put it. If it is there, you have to write, means calculate, you have to calculate. Now all the list of the formula I have given you in video 1. Now that one, applying those formula, you have to calculate the interest on drawings and write it inner both the partners inner column, add outer column the total amount of interest on drawings. Okay, so this is in this sum it is not there, so ignore that. Debit side, now debit side 5 items come. Now interest on capital, interest on capital, salary, commission to the partners, transfer to general reserve, and share of profit. In this sum, I think transfer to general reserve is not there. Now we have only remaining items, that is interest on capital, salary is there, commission is there. In fact, commission both the partners are getting. So that calculation is going to be very interesting. So start writing, my dears. 2 interest on capitals, 2 interest on capitals. Okay, A, B. Now A, B. Now A capital amount is 5 lakhs. What is the rate of interest on capital? He has given 6%. So 5 lakhs into 6%, 30,000. And B capital amount, how much he has given? 3 lakhs. And what is the rate of interest on capital? 6%. So 3 lakhs into 6%, 18,000. Outer column 48,000. Outer column 48,000. Okay. Now to salary. Whose salary? Whom we are giving? Salary? B will get a salary of 5,000 per month. So to B's salary, 5,000 into 12, 60,000. Then to now commission, both the partners are getting commission. Now who is getting commission? A will get 2% on net sales. Net sales value is 30 lakhs. So to A's commission, 30 lakhs into 2%, 60,000. 30 lakhs into 2%, 60,000. Then B is also getting commission. Here the calculation will be different. B will get a commission of 5% on profit after deduction of all expenses, including such commission. Including such commission. Suppose this including such commission would not have been there, then you know how we will calculate B's commission. B will get 5% on profit after deduction of all expenses. Now for a moment think that these words are not there. Now how will you get? From 5 lakhs you subtract these 3 items. Whatever balance is left over, 5% of that. Now into 5 lakhs, now the total is 60, 1 lakh 20, 168. So 5 lakhs minus 1 lakh 68 is 3 lakh 32. 3 lakh 32 into 5 by 100. Simple. But he is telling after including such commission. That means his commission also should be subtracted. How is it possible? Now only we are calculating commission. He is telling you subtract that, then whatever profit comes, of that 5%. Now you remember, no, 11th standard manager's commission we calculated. Manager is entitled commission of 5% of net profit after charging such commission. Then whenever he uses the word after charging such commission, what do? We calculate the net profit, that is credit total minus debit total net profit in the working note, into R by 100 plus RV2. Then that will be the manager's commission. Same way here also we will do. To B's commission working note. Okay, leave around 4-5 line space. Working note. B's commission is equal to now 5 lakhs minus 1 lakh 68,000 bracket close into 5 by 105. 5 is rate of commission. 100 plus 5. R, this concept is R by 100 plus R. R means rate of commission. R okay, by 100 plus R. So the amount is 3,32,000 into 5 by 105. 3,32,000 into 5 by 105. So amount is 15,809.52. So we can write 15,810. Check whether it has come or not. Yes, it has come. See? Okay. It has come. 15,810 commission. So write down here to B's commission 15,810. Okay. To share of, now I told you no general reserve transfer in this sum. To share of, now another item is share of totally 5. Interest on capital, salary, commission, transfer to general reserve, share of profit. In this sum, general reserve transfer not there. To share of profit. Okay. A, B. 5 lakhs. Here 5 lakhs. Okay. Here 5 lakhs. So now, already we found out 3,32,000. Now 15,810. If you subtract minus 15,810, so it will come 3,16,190. 3,16,190. 190. Now what is the profit sharing ratio? He has given 3:1. 3:1. So by 4, 79,004.83. Okay, 79,048 into 3, 2,37,142. 142. Check whether it has come or not. Yes, 1 rupee different, okay, 173.79. So that 0.5 rupee, okay, decimal rounding off we have done. Now that's all. Appropriation account is over. Now write down capital accounts. See, mind you, I am explaining the profit and loss appropriation on capital accounts. The two topics, the most important topics, are yet pending. That is partnership, what is that? Past adjustments and guarantee of profits. Those things also through sums I will explain. Of course, I will explain the concept thoroughly before working out a sum. Okay, but practically it can be explained only by solving a sum. So that we will take it up. Okay. So now he is asking to prepare capital accounts, and mind you, here capital accounts are fluctuating. Now how do you know capital accounts are fluctuating? Because question is silent. Okay, what do you mean by silent? He has not told anywhere that capital accounts are fixed. If the capital accounts are fixed, he will very well specifically will tell the capital accounts are fixed. Or if he gives you current account balances of the partners, then also you should assume that capital accounts are fixed. Not assuming, that is what it is. If the current account balance are given, that naturally the capital accounts are fixed. Or if he tells that capital accounts are fixed, then you have to take that as fixed only. So here he has not told anything, that means normal capital accounts. Okay, there is no fixed capital accounts and all. So capital accounts. If the capital accounts are fixed, where will you transfer all the items? That is interest on capital, salary, share of profit, commission, then drawings. All of them will come in current account. But here, since the capital accounts are fluctuating, all of them you will write it in the capital account itself. This one I have already told you. There are two partners, so only two columns both the sides, A and B. A and B. Particulars A, B. Particulars A, B. Debit, credit. Now credit side, by balance brought down. This one I have already told you, capital accounts by its nature always credit balance. So what are the credit balance of capitals? 5 lakhs, 3 lakhs. 5 lakhs, 3 lakhs. Then I told you diagonally opposite side it will come. You remember in video 1 I will explaining capital accounts concept while explaining all the appropriation debit side items will come in the credit side of the capital accounts, because you have to give them those amounts to the partners. How will you give? By adding their capitals. How will you add? Now capital accounts are there in the credit balance, so you put all those items also in the credit side. So automatically the those amounts which and all you have appropriated to the partners, that will get added to their capitals. What are the items we have given to them? Interest on capital, salary, commission, both the partners' commission, then share of 4 items are there. So we will write all the 4 items here. Debit side, drawings and interest on drawings will come. But interest on drawings is not there in this particular sum. So we'll take only drawings. So first you write down credit side, by interest on capitals. Now what are the amounts of interest on capital? We have already calculated 30,000, 18,000. So write down 30,000, 18,000. By salary, I think only one partner is getting salary. Who is that only one partner getting salary? B. No. Yes, 60,000. And commission, both the partners are getting. So by commission, both the partners are getting. How much both the partners commission? A 60,000, B 15,810. And debit side will come 2 drawings. Debit side will come 2 drawings. What are the amounts of drawings? 80,000, 60,000. 80,000, 60,000. Okay, that's all. Do the credit total. Okay, that's all items we have put. Now only we have to simply close it. Now what is the amount? 5,90,000. And this one more item we forgot. By profit and loss appropriation account, share of profit, SOP, share of profit. What are the amounts, my dears? 2,37,142 and 79,048. 79,048. So this total I have to change. What is the total? 2, 4, 1, 7, 9, 3, 12, 1, 6, 2, 11. 11 lakh 27 142. This one 8, 5, 8, 13, 22, 2, 3, 9, 10, 17, 1, 4. 4 lakh 72 858. So 11 lakh 27 142, 4 lakh 72 858. To balance, carry down balance amount 11 lakh 47 142. This one 4 lakh 12,858. 4 lakh 12,858. Perfect. Okay, so this is the concept of capital account, profit and loss appropriation account, capital accounts. Now we'll get to the most important one, past adjustments. Now let us first of all make it ready about a particular sum regarding past adjustments. Okay, then we will work out the I'll explain through that sum. Okay, yeah. We'll do question number 73. This one, past adjustment. Definitely will do. See, what is past adjustment? What is past adjustment? Errors have been made while preparing the profit loss appropriation account. Then those errors will continue in capital accounts also, that will get reflected in capital accounts, and that wrong capital balances will go in the balance sheet also. Now when those errors will be detected after preparing all these things means which things? Final accounts, financial statements of partnership firm. What do you mean by financial statements? Trading account, profit and loss account, profit and loss appropriation account, capital accounts, balance sheet, everything has been prepared. Later on you have found out that few errors have creeped in while preparing the appropriation account. What do you mean by errors creeped in? Credit side interest and drawings will first start. Net profit you have transferred correctly in the appropriation on credit side. Now interest on drawings, it was 9%, but you have charged only 6% to the partners. Or interest on capital was not there at all in the deed, but you have given to the partners. Or other way around also, was there in the deed, but you have not given. Salary was there, but you have not given, or was not there, you have given. Similarly, commission. Then what about share of profit? Share of profit should have been 5:3:2 ratio, but you have distributed in capital ratio. So all these kind of mistakes would have happened. Now how will you rectify? For that there is a process. You cannot go back again in the financial statements, delete the wrong things and insert the correct things. That is not allowed. You can rectify. These are all errors. Now errors can be rectified by passing journal entries, rectifying entries. How will it be done? Through what? Now I told you, no. Ultimately those will be reflected in the capital accounts, because appropriation account ultimately where you transfer to the capital accounts. No, that means the rectification will happen through partners' capital accounts. Because of those errors, now one partner would have gained, one partner would have sacrificed. So we have to reverse that. How will it be done? That I told you. No, this is theoretically to say it's very difficult. Now when we work out the sum, through sum it can be explained properly. So look at here. Mudit, Sudhir, Uday. Now there are three partners in a firm sharing in the ratio of 3:1:1. Their fixed capital balances are 4 lakhs, 1 lakh 60, 1 lakh 20,000 respectively. That means capital accounts are fixed. And now if at all, now here a rectifying entry, we will pass through current accounts, because capital accounts are fixed, is telling. No, I told you, no, means rectification will happen through capital accounts, I told you. But here we cannot do, because the capital accounts are fixed. So in the rectifying entry will not bring capital accounts, will bring current accounts. Net profit for the year distributed among the partners is 1 lakh. Okay, without taking into account the following adjustments. 1 lakh is already distributed without taking into account the following adjustments. Interest on capital 2.5%. That means interest on capital should have been given but not given to the partners. Salary to Mudit 18,000 and commission to Uday 12,000. Should have been given, not given. Mudit was allowed a commission of 6% of individual profit after charging such commission. You remember, no? Just now before we have calculated a commission after charging such commission. That should have happened in appropriation account. They forgot. Now we will do. Pass a rectifying journal entry in the books of the firm. Show workings clearly. Definitely. First of all, this 1 lakh rupees has been distributed without considering these amounts. That means that profit distribution wrongly it has happened. So first, how will we do? Now, this rectifying entry can be passed by preparing a proper working note. Proper working note. What working note will be prepared? Now, that is called adjustment table. That is called adjustment table. Through that, that is working note, and in that working note, we can find out how to write the what rectifying entry will come. Okay. Now look at here. Adjustment table. Okay, adjustment table. Now there are totally how many partners? 3. 3 plus 2, 5 columns. Divide your page into 5 equal columns. 2 partners are there, 4 columns. Now 3 partners are there, so 5 columns. 3 plus 2. If 4 partners are there, then 6 columns you have to divide your page into. Particulars. What are the names of the Mudit, Sudhir, Uday? Mudit, Sudhir, Uday, firm. Okay. Now divide your page, okay, like this into 5 columns. Then debit, credit, debit, credit, debit, credit, debit, credit. I will explain the logic of this table. Sir, what is this table? No, seems very complicated. No complicated at all. I will give you the logic of it. Then easily you can relate yourself to it, this table. See, where the error or mistakes have happened in profit and loss appropriation account. Then that errors have continued in which place? In the capital accounts. Now, appropriation account and capital accounts is there in this table. Sir, where, sir? You are telling something. No. Okay, I will tell you. Now, this firm column represents profit and loss appropriation account. This is profit and loss appropriation account. And these partners columns, no, they represent capital accounts. They represent capital accounts. Partners columns. Okay. So now, what happened ultimately? Profit was distributed 1 lakh rupees. What is the profit sharing ratio? 3:1:1. Without giving interest on capital, salary, commission. Okay, commission to both Uday and Mudit both, and profit 1 lakh was distributed. That is a wrong distribution of profit. Which in what ratio it has been distributed? 3:1:1. So get back that profit from the partners. Now you tell them we have already wrongly credited 1 lakh rupees in the ratio of 3:1:1. That is 60,000, 20,000, 20,000. Give that money back. How will you take the money back from them? You have credited the partners' capital accounts share of profit. Okay. Now to take it back, what will you do? You will debit. Now we will write down here wrong share of profit. Rupees 1 lakh. SH means share in 3:1:1 ratio. 3:1:1 ratio. So 60,000, 20,000 and 20,000, and give back that money to the firm. Profit and loss appropriation credit. Then 3 things they have missed: interest on capital, salary, commission. Okay, interest on capital you give to the partners. Now interest on capital comes in the appropriation on debit side. From there it comes in the capital account credit side. Now both are there in that adjustment table. partners column represent capital accounts, firm column represents appropriation account. So interest on capital, now you credit in the capital accounts, debit in the, or to put it other way, you debit it in the appropriation account, credit to the partners. So now 2.5% of 4 lakh, 10,000, okay, 10,000, 2.5% of 1 lakh 60,000 is whatever amount it is, I think 4,000 rupees, and 1 lakh 20 into 2.5, 3,000 rupees. Okay, so 10,000, 4,000, 3,000 interest on capital. So what will you do? Write down interest on capitals. Credit the partners. 4 lakh into 2.5% is 10,000. 1 lakh 60,000 into 2.5%, 3,000. No, 4,000. 1 lakh into 2.5%, 4,000. Then 1 lakh 20,000 to 1 lakh 20,000 into 2.5%, 3,000. Credit the partners and debit the firm, because it comes in the appropriation account debit side. Appropriation account debit side. Okay, now we will continue. Now commission. Now two partners are salary to Mudit's salary. Mudit's salary. How much Mudit's salary? 18,000 rupees. So credit Mudit and debit firm. Okay. Then after Mudit's salary, commission to Uday. How much commission to Uday? 12,000. Commission to Uday, 12,000 credit, and because it comes in the appropriation on debit side, that's why we wrote in the firm column debit. Again, it goes to the partner's capital account credit side. So we wrote Uday credit. Then commission to Mudit. Uday we have written 12,000. This is Uday only we wrote, no? Yes. Now commission to Mudit. In bracket write down working note and leave sufficient space. Around 5 lines. 5 or 4 lines. Write down Mudit's commission. Okay, is equal to Mudit's commission is equal to, is telling 6% of divisible profit after charging such commission. This one I have already explained. Now how much net profit we have? 1 lakh minus 17 plus 18, 35, 47, that is 53. Now into 6 by 106. So 53,000 into 6 by 106. 106 ones are 500 into 6. So rupees 3,000. Mudit's commission. Okay. So 3,000 rupees credit here and debit firm, because it comes in the appropriation on debit side, and credit the partner. That's all. All the points we have taken into consideration, what and all mistakes have happened, we have taken that into consideration. Now we have to close. How will we close, my dears? Clearly, now tell me, firm, which column is more? Credit column. That means appropriation account. I told you, firm column represents appropriation account. So if appropriation credit is more, means profit. Debit is more, means loss. That one you have to remember. If firm column credit is more, profit. Debit is more, loss. Clearly, 1 lakh credit. Now 17. Now the debit total is 35, 47, 50. 35, 47, 50,000 rupees. So 50,000 rupees credit is more. So you write down debit side, debit column 50, and here you write down share of profit. If debit is more, it is loss. Share of profit. Now what is the profit sharing ratio? 3:1:1. 3:1:1. Now credit the partners. 30,000, 10,000, and again 10,000. That's all. Okay, that's all. Put a big line like this, total line. Get the totals of each column separately. 60,000, and this total is how much? 28, 31, 61,000. Just get the totals of each column separately. 20,000 and this one 14,000. And here this fellow Uday, debit total 20 and credit total is 25,000. Now if you carefully observe, first partner Mudit, which column total is more? Credit total is more, 1,000. And this fellow, debit total is more, 6,000. And this one, 5,000, credit total more. Now, journal entry is there in front of us. What will we write in rectifying entry? Write down rectifying entry. Okay, now we got it. We will credit Mudit and Uday, and Sudhir will be debited. Sudhir, how much will be debited? Okay, 6,000. Sudhir's current account, not capital account. Sudhir's current account debit. Sudhir's current account debit 6,000 to Mudit's current account, to Mudit's current account 1,000, to Uday's current account, to Uday's current account 5,000, to Uday's current account 5,000. Okay, this is the rectifying entry. Narration you can write being errors, okay, committed while preparing the appropriation account, now rectified. You can write on the narration like that. This is the, that's all. Only to write this rectifying entry we had a big adjustment table. Without doing that adjustment table you cannot write this journal entry. There are different methods are there through which this means the table, this table I have done in a particular way. Each teacher will have his or her own style. Every method can be explained, but here in this video cannot be explained all the methods, no? So I have picked up the method which is very famous and which is there in your T.S. Agrawal book. So that one T.S. Agrawal, even in Goel also they have done the same way. Okay, so this one we have done okay, past adjustments, and the last topic which is left over is guarantee of profits. Now guarantee of profits is quite easy, my dears. Here what happens while preparing the appropriation account, now one partner might have been given guaranteed amount of income from the business. By whom? By other partners. They will tell that you will get this much minimum profit. Example I will tell, ABC are 3 partners. Now C was given a guaranteed profit of 30,000. Okay, 30,000. Now in a particular year, say for example, profit happened 1 lakh, and profit sharing ratio is 3:1:1. Now now again I am repeating, ABC profit sharing ratio 3:1:1. Now profit happened 1 lakh. Now C is guaranteed profit. Guaranteed profit. I told you in my example rupees 30,000. Now here if you see, he will get, if you profit, this is divisible profit. Okay, now divisible profit, that means after doing credit minus all debit totals, now remaining profit is 1 lakh, and in that C how much you will get, C's share of profit, how much you will get, 1 lakh into 1/5. Okay, 20,000. Now here, but how much he was given guarantee? That means he will take 30,000. Suppose his calculated profit is more than 30,000, he will get that calculated profit. Suppose here the profit is not 1 lakh, it is 2 lakhs. Then his amount is 40,000, no? Then he will take 40,000, not 30. Minimum profit 30,000, guaranteed. That is not fixed, guaranteed, minimum. If his calculated profit is coming more than the guaranteed profit, he will get the more amount. But here he will get this amount only. Okay. So in that scenario, my dear, so what will you do? Now he will get more profit. Now this one you strike it out. Now he will get 30,000. So that excess 10,000 for C is called deficiency for the firm. Now if he is taking more, then other partners A and B has to bear it. In what ratio? That in question he will specifically mention. Sometimes he will not mention anything. That he was given. That means this 10,000 will be borne by A and B in their profit sharing ratio. That amount will be subtracted. Suppose he tells that no, A is bearing, then you subtract this amount from A's share. Suppose say B is telling that I will bear it. Now you subtract that amount from his share of profit. Now sometimes the question will tell A and B decided to bear the deficiency in another ratio which is different from profit sharing ratio, 1:1. Some other ratio they will bear. Whatever question indicates you, based on that you go. If question is not silent completely who is bearing, then that means A and B both will bear the deficiency in their particular ratio. Through one sum we will do, you will understand, my dears. Mind you, before getting into the sum, I would like to tell to all the students, see, this is an explanatory, means descriptive explanatory videos, my dear. This chapter cannot be contained in these two videos. First video around 1 hour 30, more than 30 minutes, 1 hour 30 minutes, 35 minutes I believe. And this one will get over by within 10 to 10 minutes more, around 50 minutes or 1 hour. You take 50 minutes video. Can you really believe that entire concept, such a huge chapter, can be explained in, it's not possible, no, practically. So for that you need to, now to learn the chapter thoroughly, to make lot of sums, practicing the sums, should join my classes. I take classes in Chennai. So you can always if you search Google Kailashpati Coaching Center, immediately it will come, and there all the details, phone, call numbers and all are there. You can always contact me, and you can have regular classes. I provide regular classes offline and online, both live online classes. I provide classes across India, online classes. So you can always contact me. If you have liked this video, if you feel that explanation is done well, so to have even more, to go deeper into the aspects, all the aspects. See, this is like the guide. You go to tourist spots. Suppose you go to a hill station, mountains, where the guide has taken to you up to the nearest place of the mountain. Now he is telling, this is the mountain, looking beautiful. No, you got very the guide has brought up to you there. It's exact like this. These videos are like that. Now suppose say you request the guide, then please take up to the mountain. He has already gone there. He does that work also. But only thing is, for that lot of time is necessary. In this time, so for that again another step you have to take. So same thing, my dear, to go into the deeper aspects of the chapter, to do lot of practice of the sums, lot of twists and turns are there. This is not the basic explanation only has been done, but really to get into the depths of the chapter, you have to sit down with the teacher. Then only he can guide you through all the nitty-gritties of the chapter. For that, you please join my classes. All the details are available in YouTube channel. All the details I will give. My phone number, my contact number, everything will be there, and you can always contact me. You can join my classes, online, offline, both I provide. Offline means if you are living in Chennai, you can come. Even in Chennai, based on Chennai is a large city, so far away, the students who are far away, they are joining online classes. Some students who are joining offline, nearby place they stay, now they are so feeling comfortable for online classes. They are asking, sir, can I take offline and online both? That is the student's choice. Some students who are joining from across length and breadth of India, some students from Dubai and also took the benefit of it. So they are completely online, of course. So you also can always contact me. Okay, now coming back to the topic again. So guarantee of profits. Okay, one sum we will take up, my dear, then we can wind up this video class. Okay, now if you carefully look at here, this one you see 81 we will do. A, B, C are partners in a ratio 4:2:1. It was provided that C's share of profit for a year would not be less than 75,000. Okay, profit for the year was 31st March 2024 is rupees 3,15,000. You are required to show the appropriation among the partners. No, is iron profit and loss account not required. Wait, we will take up good sum. Yes, we'll take up this. 92. It's a very good sum. It's very famous sum, in fact. Asgar, Chaman, Dolu are partners in a firm. Their capital account stood at rupees 6 lakhs, 5 lakhs, and 4 lakhs respectively. On first day, they are opening capitals. They shared profits and losses in the proportion of 4:2:3. Partners are entitled to interest on capital at 8% per annum. Oh, everything is there. Salary to Chaman and Dolu 7,000 per month, 10,000 per quarter respectively as per the deed. Dolu's share of profit, excluding interest on capital but including salary, is guaranteed at a minimum of 1,10,000 per annum. Dolu is the third partner. Any deficiency arising on that account shall be met by Asgar. I told you, no? The guarantee can be given by a single partner here, only Asgar has given. The profit for the year is 4,24,000. Prepare profit and loss appropriation. Definitely we will do. All of you take up your notebook. Question number 92. I told you, no, few sums I will explain. Numerical sums also, no, this is what. And guarantee of profits can be explained through sum. There is no separate concept. This concept is there inherently while preparing the profit and loss appropriation account only, that concept is there. Okay, through profit and loss appropriation account only, concept can be explained. Profit and loss appropriation account, 31st March 2024. Particulars, rupees, particulars, rupees, debit, credit, by profit and loss account, net profit, by profit and loss account, net profit, 4,24,000. We again in this sum again we do not have interest on drawings. Debit side to interest on capitals, Asgar, Chaman, Dolu. Okay, now 6 lakhs, 5 lakhs, 4 lakhs. What is the rate of interest on capital he has given? 8%. 6 lakh, 5 lakh, 4 lakh. 48, 30, 48, 40, 32. 48,000, 40,000, 32,000. Okay, 32,000. Okay, now the total amount 1,20,000. 1,20,000. This is interest on capital. And proportion of partners are entitled interest on capital 8% per annum. And salary to Chaman and Dolu 7,000 per month and 10,000 per quarter respectively. 2 salaries. Chaman, Dolu, 8,000 per month. 8,000 into 7,000 per month. 7,000 into 12, 84,000. And this one 10,000 per quarter. Yearly 4 quarters. 10,000 into 4, 40,000. 1,24,000. 1,24,000. Okay. Then 2. Is there any commission? Check, no. 8% is interest on capital, and salary to this one we have done as per the salary of the Dolu's share of profit. That's all. No commission and all are there. So now only we will write to share of profit. Commission is not there. Asgar, Chaman, Dolu. Working note. Okay, working. Why working note? Because we have Dolu's guaranteed profit. No, that's why. So 4,24,000. 4,24,000. Now what is the balance profit? This is 1,20,000 plus 1,24,000. 2,44,000. So 1,80,000. No. 2,80,000. 2,80,000. Is it 2,80,000 or 1,80,000? 1,80,000. 1,80,000. Okay, 1,80,000. Now working note. Divisible profit. Divisible profit. Okay, 1,80,000. Profit sharing ratio. Asgar, Chaman, ACT. Asgar, Chaman, Dolu. 4:2:3. 4:2:3. Dolu's share of profit. Dolu's share of profit. 1,80,000 into 3/9. Okay, 60,000. Now he's telling 60, and he's telling, look at here. Where is the guaranteed amount? Dolu's share, now this one. Dolu's share of profit, excluding interest and capital but including salary, is guaranteed at a minimum of 1,10,000. So including his salary, he should get 1,10,000. Now his share of profit is 60. Add salary of Dolu, 40,000, 1 lakh. Okay, so Dolu's income. Okay, Dolu's income with the salary. But guaranteed income including salary rupees 1,10,000. So how much amount is falling short? 10,000 rupees. Therefore deficiency, it is falling short. 1,10,000 minus 1 lakh rupees 10,000. Who will bear? Asgar will bear. Therefore Asgar share of profit is equal to, divisible profit is 1,80,000 into, what is the profit sharing ratio? 4/9 minus, he will bear this deficiency, no, minus 10,000. Minus 10,000. So this is 80,000 minus 10,000. Minus 10,000. Rupees 70,000. Rupees 70,000. This is Asgar's share of profit. Now that, then after that, and now Dolu will get, now Dolu's share of profit will be, see, out of 1,10,000 include, now already how much he was given salary, because this 1,10,000 including salary. Now salary already how much we have given? 40,000. So he will take profit 70,000 again. Not 60. We already calculated in the working note 60,000. No, but if you give 60,000, then it will get restricted to 1 lakh. So it has to be 70,000. So he will take 70,000 share of profit. And Chaman's share of profit, no issue at all. Simply calculate. How much? 1,80,000 into 2/9. Because 4:3:2. So 2/9. Okay. So 40,000. So 70, 70, 40. Go with that. Simply write down 70,000, 70,000, 40,000. Some mistake. Asgar, Chaman, Dolu. Yes. 70,000, Chaman 40,000 and Dolu 70,000. Asgar, Chaman, Dolu. I hope all of you have yes, Asgar, Chaman 4:2:3. Okay, so this is it, my dears. And no, I'm just verifying whether the working mode has been given perfectly or not. Dolu share 3/9, perfect. Guaranteed income, okay. Asker 4/9, Chaman 4:2:3, very good, perfect. Okay, 40,000. And now these amounts we have already done, so this is the answer. This is how guaranteed profits calculation will be done and appropriation account. See, in this a lot of variations are there. As I told you, everything cannot be given in these kind of videos. For that you need to join my classes. In my classes I give lot of practice. I not only solve all the practical sums of the T.S. Grewal book. I have prepared my own book, which is a collection of from wide variety of textbooks, past examination sums, model papers, past sample papers, CBSE sample, ISC sample papers. Now there is a KPCC revision book will be provided. Once the portions from T.S. Grewal is over, that book will be given. And apart from that, for board exams we prepare around 10 to 15 question papers we solve, and more question papers with solutions I will give, which are prepared by me. So lot of work has to be done for 12th CBSE and ISC exam preparation. So all of that done is taken care of in KPCC. You can always approach me by phone call or by WhatsApp or whatever. Numbers and all details and all will be given here. Or if you go to Google search Kailashpati Coaching Center Chennai, then easily you can get all the details. Okay. So I hope you have liked the class. Lot of explanation has been done. Even though imagine it's almost more than 2.5 hours class I have given. Okay, only basics explanation itself I have taken so deep. Imagine if you join my classes, how much benefit you will have. Think about it. Okay, and if you are logically satisfied, then you will always want to join my classes. Thank you so much, my dears. I'll give more and more classes for other chapters also. That is, coming chapters are valuation of goodwill, change in profit sharing ratio. Of course, change in profit sharing ratio is not there in the portions of ISC students, so they can skip that video. Admission of a partner, retirement, death, dissolution. This is partnership. Then company accounts, issue of shares, issue of debentures. Then for ISC students, there is another chapter called redemption of debentures. That also Then next volume book, that is book that we will do financial statements analysis. In that accounting ratios, then cash flow statement, comparative common size statements. For IAC students, there is something called trend analysis. So all that stuff I will take care of. I will definitely give these descriptive videos, explanation about the chapters. For practically working out the sums and even going into the wide variety of twists and turns will be there. You don't think that these videos not only my video, you watch any video in any other teachers videos, no one can give you all the dimensions through these kind of videos. It's impossible. If you are believing that, then you are wrong only. Or if any person is telling that he is teaching everything, he is lying. He or she, whoever it may be, is lying only. It's not possible. It is possible if they give entire portions in the videos. That is possible. I'm not, but the time factor is there. No, that one. It is possible. Why not possible? But within the constrained time, if any teacher imagine I have given 1 hour, more than 1.5 hour class, here 1 hour. Now within 2.5 hours, this much can be explained. I have explained. I will give you more videos, all chapters. Not only this, even for CA students foundation accounts also I will give. For CA intermediate advanced accounts I will give. Cost account, cost accounting, there is a paper. All the videos I will upload, okay, for students' benefit. Thank you so much, my dears. Okay, wait for my other videos. Thank you.